Ladies and gentlemen, good day and welcome to the CG Power and Industrial Solutions Limited earnings conference call hosted by DAM Capital Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital Advisors. Thank you, and over to you, ma'am.
Thanks, Vivian. A warm good evening to everyone. On behalf of DAM Capital, I would like to welcome you to the Q1 FY23 earnings call of CG Power and Industrial Solutions Limited. We have the management today being represented by Mr. N. Srinivasan, Managing Director, Mr. Sushil Todi, CFO, Mr. Ramesh Kumar, President, Industrial Division, and Mr. Mukul Srivastava, President, Power Systems. I'll now hand over the call to Mr. N. Srinivasan for his opening remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Yeah. Thank you, Bhumika. Good evening, ladies and gentlemen. Let me first extend a warm welcome to you for the Q1 earnings call. I am Srinivasan, Managing Director of the company. I would like to again introduce my colleagues who are with me on this call. Ramesh Kumar, President, Industrial Division. He takes care of motors and drives business. Mukul Srivastava, President, Power Systems. He takes care of the transformer and switchgear business. So Ranjan Singh, who takes care of our railway business, is not with us today. He is traveling. Sushil Todi, CFO of the company, is with us. So Varadarajan, who is the company secretary and also in charge of legal, he is also with us. I move on to company performance. All the businesses of the company performed very well in this quarter. Sales and profit before tax, before exceptional items for the standalone company for Q1 FY 2022-23, the highest in the last 26 quarters, contributed by growth of in all the business divisions. Aggregate sales for the quarter were higher at 1,559 crores, recording a growth of 63% year-on-year and 11% quarter-on-quarter. Q1 of last year, of course, was impacted by COVID lockdown. To that extent, the figures are not comparable. Profit before tax was at 165 crores, at 10.6% of sales in Q1 FY23, as against 73 crores, 7.6% of sales in Q1 of FY22, and rupees 131 crores, 9.3% of sales in Q4 or FY22. Margins were higher due to cost-saving initiatives in procurement, increased productivity, and reduction in finance cost on account of repayment of term loans. Return on capital employed on an annualized basis for Q1 of FY23 was at 39%, as against 24% in Q1 of FY22. Free cash flow generated for the quarter was at 70 crores. Now we move on to segmental performance. Industrial systems. Aggregate sales for the quarter were higher at 1,106 crores, recording a growth of 61% year-on-year and higher by 15% quarter-on-quarter. Profit before interest and tax was at 153 crores, 13.8% of sales in Q1 of FY23, as against 64 crores, 9.3% of sales in Q1 of FY22, and rupees 135 crores, 14% of sales in Q4 of FY22. Margins were again higher in Q1 of FY23 compared to Q1 of FY22 due to improvement productivity and cost-saving initiatives. Unexecuted order book for this division as on 30/6/2022 stands at 1,959 crores, which grew by 16% compared to 1,691 crores as at 30th June 2021. Move on to power systems. Aggregate sales for the quarter were higher at 453 crores, recording a growth of 70% year-on-year and 1% quarter-on-quarter. Profit before interest and tax was at 40 crores in Q1 of FY23, as against 28 crores in Q1 of FY22 and 27 crores in Q4 of FY22. Margins were higher sequentially, but lower year-on-year. Q1 of FY22 margins were better due to execution of certain export orders with higher margin. Unexecuted order book at the end of June 30th, 2022 was 1,713 crores, which grew by 43% compared to 1,197 crores as at 30th June 2021. Good demand was observed for transformers and switchgear. Consolidated performance. Consolidated results include the performance of operating subsidiaries at USA, namely QEI Incorporate, and in Sweden, Germany, and Netherlands, which are drives and automation companies in Europe, and other non-operating and holding subsidiaries. Q1 performance sales for the quarter Q1 consolidated performance sales for the quarter were at 1,665 crores as against 1,050 crores in Q1 of FY22, and profit before tax before exceptional items was 172 crores as against 71 crores in Q1 of FY22. Some of the key events in Q1. During this quarter, Tube Investments of India exercised its option to subscribe to the 8.5 crores equity shares by paying the warrant subscription money of 55 crores. There are no further warrants outstanding as on 30th June 2022. Tube Investments now holds about 58.05% of the equity share capital of the company. 2. The company prepaid the remaining term loan of rupees 100 crores outstanding out of accruals, and as of now the entire term loans have been paid in full. India Ratings have upgraded the company's long-term rating from AA- to AA stable and affirmed the short-term rating to A1+. The board of directors of the company, while approving the business plan, have also approved a capital expenditure program of 210 crores to be implemented in the current financial year. The capital expenditure will be spent in expansion, debottlenecking, modernizing the existing facilities, including apart from that, money will also be spent on research and development, information technology, and environment and EHS, environment, health and safety. Out of the 211 crores, motors and drives will get about 80 crores. About 32 crores will be spent on railways, 88 crores will be spent on power, and remaining will be on other initiatives I just mentioned. Unaudited financial statements with detailed notes are available as part of the stock exchange filing and also in the company's website. Between myself and my colleagues, we'll be happy to answer questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Renu Baid from IIFL Securities. Kindly proceed.
Yeah, hi. Good evening, team, and congratulations for strong performance. My first question is basically broadly to understand how has been the demand outlook. Last quarter, we had a bit of mixed comments on certain pockets of slowdown from the industrial segment on motors and pump segment of the market. So if you can share some inputs in terms of how has been the end market demand outlook so far, and are we seeing any signs of slowdown or the broad Capex momentum remains fairly strong from end market perspective? That's the first question.
So we have given you the unexecuted order book, and we continue to get order inflows in the order book. Therefore, we don't see any immediate slowdown in any of the business segments.
So any qualitative comments on the end markets, say on the industrial segment, short cycle businesses, rail markets? That would be helpful.
Ramesh, you want to say something on the motor side?
Yeah. See, actually, there is a little bit of sentiment issue in the market. That is because of the rise in commodity and down in the, again, crash of the commodity. Otherwise, there is no much problem as far as demand is concerned. So, I don't foresee any demand or recession going forward.
Okay. Secondly, what has been the kind of price hikes that we have taken on the industrial segment for motors portfolio? And do we think now that commodity prices started to ease out, there could be further transmission of these cost savings to the customers, or how do we look at the pricing side?
So I think, we have to wait and see. The last year, as you know, there were 4 rounds of price revision. So substantially, once it is confirmed that, prices are going to cool down and then relatively they are stable, then, there will be no difficulty in passing on some of the cost increases. Whatever we increase, only we are going to reduce. But provided, it has to be clear. It cannot be momentary. It has to be stable and it has to be realized. Then at that point of time, the entire industry will take a call.
Right. Sure. And one last question, if I can add on. Broadly, if we see from the margin side, you've done reasonably well. You've highlighted of certain cost savings from productivity and cost reduction initiatives. Can you throw some more input in terms of specific initiatives and the kind of results that they've started yielding, both in terms of working capital, lean management, and the operational initiatives that you've taken here?
So I will not be able to give specific details, but I can tell you. One is we have been saying that we are looking at implementing a lean program with assistance of a consultant. That is giving us some benefits. We have also been working on procurement efficiency and various modes of procurement. That is also giving us some benefits. Third is actually, as our financial position improves, we have been able to negotiate and then pay wherever possible in quicker span of time. Earlier we were taking 60 days, we can pay sometimes in some cases 30 days, some cases are down cash. So these things are now possible. Based on all these, we are seeing impact. So that's all I can say.
Got it. Thanks much, sir, and all the best. Thank you.
Thank you.
Thank you. We request participants to kindly restrict your questions to 2 per participant. The next question is from the line of Rahul Gajare from Haitong Securities. Kindly proceed.
Yeah, hi. Thank you for the opportunity. I've got 2 questions, and the first question is on the motor business. Could you give us a sense about how much of the market is served with imported motors, and which category of motors are normally imported? That is, and connected with that, how is the competitive intensity in the motors business? That is the first question.
See, the imported is there is a very little in direct import. See, direct import, if I consider, maybe about 1,200 crores is the import. But there is an indirect import. What I mean is that the motors will come with the equipment. Okay, so if I add all that, it will be about 3,000 crores is the import in India as on today.
Yeah.
And the competitive intensity?
The competitive intensity is there already because we have always been the leaders in motors. So we are far ahead with our competition. So that will always be there, and then we'll have to fight it out.
So the second question is on the railways business. Could you give us an indication of the total revenue from railways in both industrial and power in the current quarter, and how does it compare to Q4? Because Q4 you indicated that you had the highest quarterly revenue coming from railways, and also connected with that, how is your market share moving in the overall railway business?
So I think we just report only as one segment as industrial, both for motor and railways. So we don't share the details relating to railways separately. Number one. Second is, it will be very difficult to compute and then say the market share because the railways have got several segments. So we are manufacturing only traction motors, electronics, relays, point machines, etc. So the railways actually there are several, and then these several segments, and there is no official version. What is the market share for each of the products which are the company prepared by railways? We can't give you this. We don't have this detail.
Sure, but you did indicate, that last year was your highest ever revenue coming from railways. So some qualitative sense on how the first quarter has been vis-a-vis the fourth quarter last year.
Qualitatively, you ask me, we have done well in railways. We have done well.
Yes, sir. Thank you very much. I will come back in the queue.
Thank you. The next question is from the line of Ravi Swaminathan from Spark Capital. Kindly proceed.
Hi, sir. Congrats on a good set of numbers, and thanks a lot for taking my question. My first question is with respect to the motor market. Your rough sense on how the motor market would have grown this quarter. We have gained market share. What are the top 4-5 sectors which are driving the growth for both LT and HT motors? If you can give your thought process on this, would be great.
See, the exact figures I won't be able to share right now because it is not yet published, but we are anticipating a growth of almost about 78% in the quarter which has gone now. And the infrastructure and especially this oil and gas and ethanol, the pharma, these are the industries which are doing very well. So that is adding up to the growth. Even HT, water and wastewater is doing very well.
Okay. So this 7 to 8%, is it sequential growth or is it like, because YOY you have grown, industrial system has grown at 55%. So
okay, we cannot compare YOY because last year if you see 1.5 month, it is almost like close condition. So it is not right comparison. If you compare with the quarter 4, I think we are somewhere around 11 to 15%. So that's how the better comparison.
So the industry would have grown at 7-8% and we would have grown at 11 to 15%.
Yeah.
Is my understanding right? And that 7-8% would be revenue growth and not volume growth.
Oh, volume growth. Generally, the industry is measured in volume growth, not in the value. Because value growth will be more, in April, the prices have gone up, commodity prices have gone up, and then realization also has gone up.
Sure. And my second question, so basically, any status update with respect to the Vande Bharat order? How is it likely panning out? What kind of orders can come in over the next 12 to 24 months? And also the power systems export initiatives, how is it likely panning out? If you can give a thought first.
So Vande Bharat, as you know, we have got one trial order which will be executed over a 2-year period. So current tender of whatever government has announced for 200 trains, it is for a construction of the entire full train, not merely the engine part, the entire full train. Electrification, the earlier one was the electric, what we got was only the electric part. So this, over and above this, how much they will come. Anyway, in this tender, we are not eligible. Eligibility criteria is that only those who already have experience of having built and run such trains can participate. So we are not qualifying for that. So any further tenders, in what form it will come, etc., at this point, there is no clarity.
Okay, sir. And with respect to the export initiatives with power, so basically,
initiatives are always there, but as I pointed out earlier, so we have to gear ourselves up to go full hog. Earlier, our consumer factory itself had exported transformers for 1,000 crores. So right now we are still, whatever orders are there, we are making slow and steady progress. But still we have to just gear ourselves up before we go full hog in exports.
Got it, sir. Thanks a lot, sir. I'll come back in the queue.
Thank you. The next question is from the line of Janak Vora from Janak Limited. Kindly proceed.
Sir, my question is, what is the status of CG House property at Worli?
No, CG House properties, earlier this property was mortgaged to the bankers. And then we have cleared off the loan and then we have taken possession of this property with us now. That is the current status.
So that is lien is lifted, but there was some dispute for the lease renewal with the authority. So whether that is been resolved?
Oh, that is lease renewal. We have given an application, so that is being processed. Because of its own procedural thing, it is taking time. But otherwise, we are not seeing any disputes. It's a procedural delay that is taking place.
And sir, are we planning to sell CG Power CG House at Worli and its registered office to Chennai?
There is no such idea to my knowledge as of now.
Okay. And sir, second question is, since CG Power has posted now quite stellar returns, 130 crore consolidated profit, why there is no mention of any dividend? Because we are dividend starved since last 7 years. Last CG Power has paid dividend in 2015. And now since CG Power has restored part of its past glory, is it not the time to offer something to the loyal shareholders who stood behind CG Power in its toughest times?
For the year ended March 31, 2022, still there are some debit balance in profit loss account. Unless and until that loss is wiped out, we will not be eligible to pay any dividend. So
but this year, like
under Companies Act, it is not possible to declare any dividend at this point of time. 22-23, depending upon the profits and depending upon the position, the board will consider the appropriate time.
Yes, sir. This is like I am one of the 249 shareholders who are holding nominal capital more than 2 lakh in CG Power. So on behalf of them, I would like to request to consider the management at least some special dividend, some accrued dividend of last 7 years, since to celebrate the restructuring and recapitalization and like revival of CG Power.
So we will convey this request to our board of directors. The board only can take a decision.
So that is why, sir, like something you should think of, like those loyal shareholders who are holding more than 2 lakh nominal capital and since years. So they deserve something like employees, they have got all their areas, everything. Creditors are paid.
Vora, I'm sorry to interrupt,
only
sir.
shareholders are remaining now.
Mr. Vora, sorry to interrupt, sir. We request you to please join the question queue back again.
Okay, sir. Thank you.
Thank you. The next question is from the line of Ankur Sharma from HDFC Life. Kindly proceed.
Hi, sir. Good evening. Thanks for your time. A few questions. Actually, before that, just a small request. You normally give out this press release, over the last few quarters with your order book and, other segmental numbers. So it would be great to have that as well. I think this quarter we did not see that. So that was one. My question really was, on your order backlog. So when I see, the number for Q1, about 3,600 odd crores, which is, actually flattish on a Q-on-Q basis. So even in Q4, your order backlog was around the same number, which also, if I get it right, implies that your orders closed or your orders booked during the quarter may not have grown, maybe in the high single digits at best. Is that the right number? Am I missing something here? Or is that correct, that your orders booked in the quarter would have been maybe mid to high single digits?
So first is, in the press release that we have released and which we have filed to the stock exchange, we have given details of unexecuted order book as on 30th June 2022 for each of the businesses. So, I think that is, Second, your question, I think order flow is healthy because it is unexecuted order book, and this actually, whatever we execute and then that gets eliminated, only the balance that can be there. So right now, from the order book, you can see for the next 3 quarters, at least Q2 and Q3, we are fully covered. Generally, some may be executed in Q4 also. So order inflow has been quite healthy.
Okay. Any number you can share, sir, if you have it handy? What is that?
In the press release, you can see it has been filed with the stock exchange. It is there. Segment wise, we have given the number.
Right. Okay. So second, just coming back to the earlier question, in terms of exports out of your power systems business, how much would that have been during this quarter? And, how do you see this scaling up? Because if I remember it right, before or maybe a couple of years back, exports used to be a fairly sizable number on the power side. So how are you looking at it going forward?
Yeah, I don't have the current quarter export number. So whatever orders are profitable that we are executing, it's not a question. We are also applying for several overseas tenders, and then there is also a lot of demand in the indigenous side, both for the power transformer as well as to the distribution transformer. Orders have to be basically profitable, and then the customer has to be worthy of being serviced because we don't want to get our money to get stuck. So that is how we are approaching the market.
Okay. And just last one on this would be, would you just kind of split out your revenues between, on the power system side, between, the power transmission distribution utilities versus industrial consumers?
We don't share the data, sir.
Okay, great. Not a problem. Great. Thanks so much, and all the best.
Thank you. Thanks.
Thank you. The next question is from the line of Mayank Chaturvedi from Equirus. Kindly proceed.
Yeah, hi, good evening, everyone, and congratulations on a good set of numbers, sir. So I have a couple of questions on the power system segment. Now, first one would be in FY22, we commissioned a 400 kV grid substation on a turnkey basis under the EPD division. So is this one of the legacy projects that is putting pressure on the power systems margins? And what could be the EPD order book that is left to be executed currently? A ballpark number would be.
EPC.
Engineering Project Division.
So I think that is a very insignificant part of our business. We don't have big orders to execute, so there is nothing for us to report on that side. Very negligible and insignificant orders only we have.
Okay, fine. And so on the Capex side, you guided for 90 crore Capex for the power system segment. So would this largely be towards the relocation of the consumer facility?
No.
No. Okay, so have we...
So various existing facilities, upgradation of facilities, modernization, there is some automation, so balancing facilities of only the facilities currently at Bhopal and as well as at Malanpur. Only these are the areas where we are investing.
So are we yet to relocate that consumer facility, or what is the status on that?
So I will not be able to answer because the earlier facility which they wanted to relocate, in that process many of the capacities got cannibalized. So exactly it will be difficult for us to at this point of time to reconstruct or visualize how it has to be reconstructed, etc. So because of that, we will not be able to commit. I will not be able to commit on that just now.
Sure, sir. Not a problem. That will be all from us. Thank you.
Thank you. The next question is from the line of Rajiv Gupta from RBC Financial Services. Kindly proceed.
Yeah, I had two questions. One was, if you could give some flavor on the consumer product. This is, 2 quarters back, if I remember right, there was a comment from the management that we will get back to the original demerged consumer product very fast. That was one question. The second question was on stock options. What has been the company's policy on stock options, and what has, if at all, and what has been the strike price? At what general level are people entitled to stock options, and what's the policy there? Thank you.
So the employees at the senior level, key managerial personnel, vice presidents and presidents are eligible for stock option under the scheme. Last time, the senior management team were given a stock option which will vest over a period of 4 years. The strike price was around 157 rupees. So that is question number 2. Question number 1, I will ask Mr. Ramesh to answer.
Yeah. See, actually, we had 4 different consumer products when we demerged, and now we have already launched 2 products. So once we establish ourselves, maybe then we will think it over about the balance when we will be able to launch the other products. Is that your question answered?
Well, very partly. If you could give us some flavor in terms of how do you look at the market in terms of, I know you will not give me specific numbers or specific projections, but in terms of how important it will be in the next 3 years in the overall CG Power portfolio today in terms of percentage of turnover, etc. Just a little bit of more flavor. If you could be a little.
It will not be possible.
I know. Yeah. I'm not asking for numbers, but in terms of how significant, or is it a very high priority stuff? I'm not asking you for a specific number.
Every business we are operating are a priority, sir. Every business is priority. Consumer business is definitely a priority. But we are just totally new, therefore we have to take measured steps. it will take some time for us to grow this business.
Okay. And are you expecting any problems with the brand names, any confusion in the market between CG and your erstwhile demerged company there? How are you facing that?
We have no problems. We are not experiencing any problems.
All right. Thank you so much. Thank you.
Thank you. The next question is from the line of Manish Dhariwal from Fiducia Capital Advisors. Kindly proceed.
Very good afternoon. Am I audible?
Yes.
Yes, sir. Proceed.
My heartiest compliments to the management team for transforming a very sad state of affairs, and I'm confident that CG Power will be emerging as a case study in many business schools. The way this company has transformed itself. So my sincere compliments to the team. With that, so I would basically pick a thread from the previous question about the consumer side of the business. So as shareholders, I would request a little more understanding about how the customer is receiving the CG brand for the consumer products, because there is a complete new distribution network. There is a completely new setup that has to be created, because the erstwhile has gone with the demerged company. And you mentioned that out of the 4 product lines, 2 have been introduced in the market, which I understand like science is one of them. So some color is very much required, and I hope you will oblige us. And the second question is on the broader EV bet or the EV initiative that the whole group at the TI, and you are an important component of TI, I can very proudly say now. So is being taken. So what is it that CG Power is doing on the EV side? You mentioned about some motors, etc., that we are working on the EV side. So that understanding is what I request for.
So actually the CG brand is well-known brand in the market. So we are introduced as a CG brand only, and we already have motors, and we have commercial motors which goes to the consumers. So the entering into the CG brand is not an issue for us, and that is the reason we have re-entered all these products, and then we are going with that brand only. We don't have any other problem as far as consumer products is concerned.
Customer response has been good. Some of the products we have introduced, customer response and dealer response have been quite good.
Yeah, quite good.
So as regards the question on EV, if I have understood your question correctly, our intent is, CG is predominantly, we know the manufacturer of motors quite well. So we would like to position ourselves to manufacture motors for the electric vehicles, for which we are currently working in the development stage. Until such time, development is completed and product is approved and product is shown to some OEMs, etc., we will not be able to share any information. But certainly we are interested in this area, therefore we are working on this particular business.
Thank you so much. In fact, when you mentioned about the Capex side, it was 2,211 crores and split up into the various segments. I was actually hoping to hear something basically being focused towards the EV, which I did not hear. That's why I was trying to kind of get a clarity that on the focus towards EV. And your words about the consumer side of the business is, I think, very reassuring, because the Crompton itself is continuing to be a very strong brand anyway. So, kind of directly competing with them and getting good dealer interest and all is like very reassuring. So that's the good side. So on the EVs are like no Capex, no nothing. So maybe that was why I was having a concern very about.
So the existing facilities are adequate to manufacture and design and develop prototypes for EV motors also. So whatever while I have not specified, whatever additional incremental facilities that will take care of the requirements for these purposes also.
Thank you so much. Thank you so much and all the best.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Kindly proceed.
Thanks for giving me the opportunity and congratulations for very good numbers in this challenging time. Just one question, sir. I just missed your data on Capex. You had mentioned, a breakup in terms of which segment you are doing Capex. Can you please repeat?
80 crores for motors and drives, 32 crores for railways, about 85 crores for power, rest of it all IT, R&D, etc.
Okay, sir. Okay. Thank you.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Kindly proceed.
Good afternoon, sir. I wanted to know how much capacity utilization we have achieved till today. And secondly, what will be the approximate return on capital employed in next 1 year? Hello.
So the first question, if you ask me how much of Capex we have spent so far, is that...
No, Capex. Capacity utilization. How much capacity we are utilizing at our plant today?
So it is running between 70 to 80%, sir, all across our different plants.
Okay. And the second one was whether we will be able to maintain the how much savings will be there in respect of loan that we have repaid. Because as I understand now, there is no loan. All term loans have been repaid. So what will be the saving on that account?
So we almost saving around 45 to 50 crore on account of repayment of this term loan for the full year.
Full year 45 crores, right? If I'm not wrong. Okay. Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Rahul Gijare from Haitong Securities. Kindly proceed.
Thanks for the opportunity again. Sir, I understand, that CG Power has been well received in the South market, as far as consumer products are concerned. I wanted you to, discuss your experience in the South and other markets, with respect to the consumer products. That's the first question.
Sorry, can you repeat your question?
South market.
South market.
Experience in South market.
Yeah, South market experience is good because consumer generally South market contributes almost 40% for consumer, and we are very strong brand in South also. So our experience so far has been good, and I think we are also doing in the same lines of the market demand of South in our overall percentage.
Okay. So after South, which is the other region which you've done well?
East and North.
And how much would that contribute to approximately?
Percentage-wise, South will be about 40-45%, and the rest is between North and the East. West is we are yet to start in a big way. West we are in a slow start actually.
Okay, so that's the first question. Sir, the parent company has set up a separate EV mobility business, to re-enter three-wheelers and e-tractors. Can you indicate how does CG Power and TI Electric, plan to work together, to in the larger scheme of EV business over the next couple of years? Some thoughts on this business, please.
So there is no agreement between TI and CG. TI has got its own plans on mobility. If, for example, for any of their businesses, maybe for example, let us say tractors or three-wheelers, etc. If they invite some tenders for supply of motors, we will also participate. If it is any specific product development, we can develop. So everything will be an arm's length. So it has to make commercial sense for TI. It has to make commercial sense for CG. So as of now, there is no fixed understanding between both the companies. But business inquiries do come. When they send to business inquiries to various people, we also get, we respond. We compete with as any other company.
Okay, sir. Thank you very much for the answers. This is very helpful.
Thank you. The next question is from the line of Pradeep Raghunathan from Arohi. Kindly proceed.
Hi, I just wanted to ask, so you mentioned the breakup of Capex that you had in mind, but could you also tell us what kind of capacity will we have? So right now we are running at around 70-80% capacity. What is the incremental capacity that would be generated by this additional Capex?
So actually, what will happen is amount will be spent on what is called as debottlenecking. There will be sectional imbalances or there will be some modernization. We on account of that maybe about additionally 15 to 20% capacity will get released.
Helpful. And secondly, on the growth initiatives, you mentioned on consumer and EV both, you mentioned when there is a meaningful update. Could you tell us, how are you looking at this in terms of, when this would be something which you could share, let's say 1, 2, 3 quarters down the line?
Regarding?
The consumer business as well as the EV business.
So I think, they are all at a development stage. Unless and until some plans are fructified and then finalized, we will not be able to share any data.
No, I appreciate that. My question was actually, is there some sort of a milestone where, you would be able to share data around, what's happening?
No, as of now, unless and until, as I said, we are just working on the EV side, we are working on the development of motors and other products actually. As and when it comes to certain shape only, I'll be able to. It can take 3 months, it can take 6 months, it can take 9 months. Similarly, on the consumer side, we have launched whatever products we have launched, then that is actually will continue. Newer products we are in the drawing board. So therefore, as of now, as and when only the plans are finalized, we'll be able to share.
Got it. Thank you. Thank you for your time.
Thank you. The next question is from the line of Niket Shah from Motilal Oswal. Kindly proceed.
Yeah, thanks for the opportunity and congrats on a good set of numbers. I had 2-3 questions. So first on the margin side, you've done a decent job this quarter, and I'm assuming this quarter would have been the peak quarter on raw material costs for you. Given the fact that we've seen decline in raw material prices, should one now assume that given most of your contracts are fixed price contracts, you should start seeing improvement in margins?
Pardon? Can you repeat?
Given most of your contracts are fixed price contracts, and this quarter you would have seen the worst raw material costs, and we've seen raw material costs coming down across the board, should one assume margin expansion going forward?
So I think this was discussed earlier in one of the questions. If the prices continue to fall and then if there is a substantial drop, customers both and consumers will expect us to reduce the price and pass on the benefit. Because, the prices that we are now, at which we are selling, actually last financial year we increased the price 4 times because of the increase in prices. So margin expansion cannot be taken for granted that way.
Got it. And if you can also highlight what are the white spaces within the motor category where we would be targeting now, if you can qualitatively give some comments on that. There would be certain category where you would have very high market share, certain category in motors where you wouldn't be present, like for example EV motors which you highlighted earlier. But would there be more categories like EV motors where you would be targeting?
If you want to answer that. So I think, in LT motors generally we hold a large share, but every product, whether it is LT motors or FHP motors or LIM, large industrial motors, every product, as and when we get good inquiries and we want to increase our market share, we are working on it. As far as EV is concerned, as I said, it is still at a very development stage. So therefore, our priority is to all the segments of the motors which we are manufacturing. Everything is actually a growth area for us.
Sure. And one nice question, running an older plant, which we currently had in CG, versus if you had to go for a greenfield plant today, would the margin be far more different than what it is today in the existing older plant?
So I think, it has got different implications. When you put a new plant, there will be a lot of initial expansion costs, there will be high depreciation, there will be high level of investment due to automation, etc. There will be plus and minuses. we have to see because 70% is material cost. So in our business, 70 to 78% is material cost. So the play is actually, if you remove depreciation, only maybe about 20%, which how much you can play. So old depreciated plants have their own advantage. Newly set up plants will have different advantage. Both will coexist and both will have a different markets to serve.
Got it. And if I may squeeze in one final question on Vande Bharat opportunity, would it be possible for you to quantify the size of opportunity that you can address? For example, if one train would cost 100 rupees, what is the size of opportunity for you within that 100 rupees? Thank you.
No, we can clearly say, as I said earlier, one is the entire train. The current tender for 200 trains, actually, it is all for the entire train. So that I think for which we are not eligible. Earlier, they just only the electrics, that part alone was given a tender on which we have got awarded for one development order, about 37-38 crores. So that is entirely, we will supply and procure, and since it's a development order which will be executed over a period of 2 years.
Sure. I'll come back to you. Thank you.
Thank you. The next question is from the line of Shrey J. from Quest Investments. Kindly proceed.
Hello. Thank you for the opportunity. Sir, I'm slightly new to the company, so pardon me for my ignorance, if any. So from my understanding, we are not present in the low voltage switchgear segment, but that segment seems to be quite big. From what I understand, it's a 25,000 crore market. So just wanted to understand, why are we not present there? Okay, so we've not been present there in the past, but do you see any entry in the future?
So Mukul can answer that.
At CG, we used to have a low voltage switchgear business till the year 2000, which we sold off. And then over a period of time, our energies got focused on developing the high voltage switchgears right from 3.3 kV up to 1200 kV. Now, the low voltage segment per unit cost of the new item is very low, and it has its own intricacies in terms of handling the business. I mean, more so on market expansion, sales network rather than technology. So over the last 20 years, we have focused more on technology-oriented high end of the product. So as of now, we do not have any plans to be entering into the low voltage.
Okay. And sir, anything on the HVDC transformer? Because I think there also we are not present, but the other categories were there.
Yes, HVDC is one area, but in India still the HVDC contributes to around less than 15% of the total market. Since we are coming from a low base, we have ample of opportunity to grow in the areas where we are already present for so many years, and that is where we are trying to strengthen and consolidate our position. Maybe in coming future, we might think of HVDC, but as of now, our hands are full with the existing portfolio of the product we have.
Okay. Thank you. So the other question is now, since most of our subsidiaries, we were done with selling them. So just want to understand, did we get the technology from those companies, or that also goes away and if we have to do anything, we have to start from scratch?
See, on the overseas company, mostly which were on the transformer and the switchgear side, we already have absorbed the technology, whatever they could offer, and we have been upgrading the technology, especially in the segments of EHV GIS, which is now we are up to 245 kV and we are working on 400 kV. As far as the other AIS switchgears are concerned, we were already self-sufficient in India, and our Indian plants were doing well. On the transformer side, we have been there in the business for so long, so we are self-sufficient in those areas.
All right. And so just last question. So now that we've completed the turnaround and all of that is over, so in terms of management guidance, not specifically numbers, but in terms of categories, any other category that you see you could start looking into, which offers a great runway for the company in terms of growth for the next 3 to 5 years?
So it is too early to think of the existing businesses can be still there are a lot of work to be done and they can be still grown. So therefore, it is too early to think of anything else. We have not been thinking in those directions.
Okay. All right. And so just last bit on the green and renewable energy side, the hydrogen side. Do you think our company has any strengths to cater to those kind of segments?
So anything, in those areas, if it is anything to do with the power systems or motors, certainly we are well positioned to serve those industry.
Okay. All right. Thank you so much, sir. That helps.
Thank you. The next question is from the line of Rajiv Gupta from RBC Financial Services. Kindly proceed.
Yeah, thank you for taking my question again. Just wanted a flavor of what kind of Capex on the consumer product business do you envisage in the next 2 financial years in terms of ramping up? Also, what are the products we have launched? That must be in the public domain, so I'm assuming there's no confidentiality there. And what are the products which are about to be launched on the consumer product business?
Don't answer the products. Yeah. See, we have launched fresh water pumps for both the domestic agriculture and little bit in industry. And we have launched the complete range of fans, ceiling fans, table, pedestal, and exhaust, and everything. The complete range of fans. So as of now, these are the 2 products, and we are right now we started off with the contract manufacturing. So maybe going forward, we will see what is the Capex we are going to invest on that. Right now, we will not be able to tell you on that.
All right. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Ms. Bhumika Nair for closing comments.
I would just like to thank the entire management for answering all the queries and particularly all the participants as well. Thank you very much, sir, for giving us the opportunity and wishing you all the very best.
Thank you, Bhumika. Thank you, both of you. Thank you for your support. Thank you.
Thank you. On behalf of DAM Capital Advisors, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Okay.